Well, we're back with you to get you updated on our ag commodity trade, and here we are in the middle of our first trading day of the last full trading week of 2021. And here joining me to talk about it, we bring in Todd Horwitz of BubbaTrading.com. He's in Chicago today, and interesting day here in the markets. A lot of enthusiasm on the grain side, at least for corn and soybeans anyway. Todd, what do you make of that?
Good morning, Marlon. Well, I think it makes sense. I mean, we have some pretty nasty inflation, which we still have yet to have anybody really admit to it. I mean, you look at corn and look at oil. I mean, oil is skyrocketing, which should help corn. And, we've got, sugar, which also is used for oil in other places. So there's a lot of reasons for higher prices here. And certainly we're in bullish trends as well. So, I mean, really across the board, corn, wheat, and beans are very, very bullish here, although wheat's slightly lower here, but it has had a pretty big move over the last few days. So a little bit of sell-off is never a concern in this type of pattern.
Well, let's take a look at what we have currently. And on our quotes provided by bar chart on the corn, still 7 cents higher, Todd. March at 6.12 3/4. We're 2 cents from our high of the day at this point. On our soybean trade, that's the one that gets the gold star today. Look at January, 28 cents higher at 13.60. And now you have March up 27 3/4. We're at 13.68 1/2. That would be a penny and a half from our high of the day. Some talk about soybean meal today, and we had the March contract now $4.80 higher. Look at it, over $400 at 405.30 per ton. And we had the soybean oil trade also higher this morning. Look at March, now up 198 points at 57.40. They don't always go in tandem, but they sure are today. Meanwhile, the wheat market, like Todd referenced, it is sagging. We have March Chicago wheat down 6 at 808 3/4. Now it's on the low of the day. On the Kansas City market, you have the March contract 5 3/4 lower. That would be at 855 3/4, also on its low of the day. And in Minneapolis, March is down 4 3/4 cents at 1027 3/4. It's 2.5 cents away from its earlier low. By the way, the cotton market, in case you missed it, it was lower overnight. Look at it now. March trading 267 points higher, and now we're at 111.79 per pound. Got as high as 112.09. Very strong market activity in the cotton here. Todd, when you look at the rally that we are seeing right now, and I know you think that the rally is completely justified in corn and soybeans, but how far are you willing to ride this rally before you want to pull the trigger on additional sales if you're a producer?
Well, I think if you're a producer, Marlon, if you're hedged, you don't have to worry about when to sell, because the markets you'll be taking yourself out by being hedged properly. But if you're looking, I mean, certainly there's a good chance we could see $14 beans, we could see $6.50 corn. Again, obviously anything can change on any given day. But overall, we look like we're going higher. And remember, the cost of production has gone up significantly as well for the new year. So we have to make sure that we get full profits here. So the best choice is to always be hedged properly. And then you don't have to worry about it. But again, you always want to make sure you leave the upside open, because big markets don't announce themselves. They just show up. So never give up the potential for the upside while protecting for the downside.
One thing I wanted to show was the crude oil trade, and on the West Texas Intermediate crude, well, I tell you what, we had a huge turnaround after some weakness early this morning in the early hours. Got as low as 72.57 on that February contract, and now we're at 75.74. Over a 300-point turnaround there from the low, and now we're up $1.95 and within about 25 cents of our high of the day on the crude oil market. That could be supporting soy oil and corn as well. We'll come back and talk about the cattle and hog markets with Todd Horwitz right after this. Come on back. Now on to the cattle market we go. Let's go to live cattle futures and see if they're holding up or not. They kind of sagged right after the open, and they just stuck there. They just haven't moved much at all. February live cattle, for example, are now at 139.20 per hundredweight after opening and posting a high of 140.32. So we're off of that by a little over $1 and a dime, and we have just been hovering here for at least a couple hours now. We're now down 42 cents on the day from where we closed last Thursday. April down 32 cents right now. Now on the feeder cattle market, Now, also keep in mind, this is on the heels of the cattle on feed report that came out last week. Feeder cattle market today, the March contract is down 37 cents at 163.37, and it's off of its earlier high by roughly about 80 or 85 cents or so from this morning. So like in the live cattle market, it started out stronger and then faded away not long after that. But on the other hand, you have the lean hogs trading higher. February now 65 cents higher at 83.87. April up $1.12 at 87.77. And most analysts have been talking about a friendly hogs and pigs report that came out last week. Todd, do you see more behind the scenes that is driving this cattle and hog market activity today?
Well, Marlon, I think there's a lot of issues to take under consideration here. I think, first of all, feeders are a little bit weak, obviously, because corn is so much stronger today. But they do look a little bit weak in general. Fats are still fairly strong, but very close to becoming negative. And listen, you know, the higher cost of beef, the higher cost of production, and the higher inflation that we have is going to keep, you know, the retail buyer from buying as much as they would buy in the past. I mean, this is, you know, it's a very serious thing with this inflation, which leads to making hogs even stronger because we do want to get protein. And right now, that's where we're going to get it from more likely as hogs. And so if you look at it from the consumer side, this high inflation is very hurtful to your pocketbook. And, you know, you're going to buy and feed your family with the best you can do. And right now, I think hogs will continue to go higher and cattle could go, but I think cattle's in a very tenuous spot right here.
So that high that we had in the hog market in late November, we're getting just within a stone's throw of that right now. Is that going to be pretty stout overhead resistance in your opinion?
I don't think so, Marlon. I think we can go right through it, you know, like a hot knife through butter, as they say sometimes. I mean, there's a good chance this rally could continue. You know, a lot depends. You know, we are in a holiday week, even though it's a full week, but it's still, a lot of traders aren't here right now. So we'll see more next week when we get some real business back, but certainly, we could certainly go higher, and there is a lot of room to go higher now. And when you look back at what the December was, I had never seen December hogs at those prices before in all the years I've been trading. So there is a bias to the upside for sure.
Well, Todd, great information. Thank you for joining us, and we'll talk with you again real soon. Todd Bubba Horwitz, BubbaTrading.com in Chicago. Tammy, it's all yours.